Hey folks, welcome to a product review at Finominal. Today we're not going to look at a single fund, but rather at a group of them, and specifically at managed future strategies. Now, these are also known as CTAs, which stands for commodity trading advisors or trend following funds. And the goal of a strategy is simply to exploit trends across asset classes, which typically results in diversified portfolios that hold a variety of long and short positions in various instruments. Now, historically, these have only been available as private funds or mutual funds, but in recent years, there's been quite a few ETF launches in the space. Now, today we're going to look at four of them, which is DBMF, KMLM, WTMF, and FMF. And there's at least three or four other ETFs that offer the same strategies, but these have a limited track record, so we're going to ignore them for now. Now, we're also going to use AQMIX, which is a product from AQR, as a kind of benchmark fund benchmark index. So before we start comparing those products to each other, we're going to have a quick look at what the exposures of a typical managed futures fund might have been over the last decade. Now, we're going to use our alpha analyzer tool for that, and effectively going to use AQMIX because this has a 10-year track record and run a returns-based factor exposure analysis. Now, what we do see over here is the factor betas of AQMIX to the four major asset classes. And as you can see, this has been all over the place. And it's simply because there's been various bull and bear markets in those asset classes. So for example, you can see that the exposure to bonds was negative over the last few years, which means that managed future strategies have been shorting bonds. And that kind of made sense, right? Because interest rates have been going up, bonds have been going down, and therefore as a trend following fund, you jump onto the trend. Now, we would expect that the ETFs offer similar exposures like AQMIX, but let's evaluate that. We're going to use our asset compare tool to simply look at the performance of those four ETFs and AQMIX. And what we do see is that two of them, which is a product from CoinShares Smart Lucas and from DBI, KMLM or DBMF, that they exhibited similar trends in performance to AQMIX, which is great, right? So effectively, you can buy similar exposure in the ETF format that historically we've only had offered by mutual funds or private funds. Having said that, there's also these other two products, FMF and WTMF, which generate much lower return, and the trends have also been different. So they seem to be doing something different. Now, this is purely from a performance perspective. Having said that, we also do need to consider the risk associated with those strategies. And what we do see is that the Sharpe ratio of AQMIX, so this is the benchmark fund, has been much higher with 0.96 than anything what those ETFs offer, where the Sharpe ratios range from 0.41 to 0.68. Now, that's not that great, right? And this might be simply explained that AQR is able to trade many more asset classes, exploit many more trends. It might be that AQR is simply better at portfolio construction, and that's something worth considering. Now, the other aspect is that if you compare the correlations of those four ETFs to AQMIX, we can see that KMLM as well as DBMF, the correlations were a lot higher, which is great, right? So you get the similar exposure in ETF format, right? But they've been considerably lower for FMF and WTMF, so the product from First Trust and WisdomTree. However, more importantly, is that if you think about why you would invest in a managed future strategy, is effectively to diversify. And that means you should expect low correlation to stocks and to bonds. Now, what you see is that four of these products have a correlation of, slightly negative to zero to stocks, which is great. And actually, we're have quite a negative correlation to bonds. That's simply because they've been shorting bonds. but overall they are at a similar positioning versus one product, which is the one from Wisdom Tree, WTMF, is clearly different. And if you think about investing into these ETFs or into AQMIX, right, you do want to make sure that it diversifies. And this is something that you can challenge about the product from Wisdom Tree, given that it has a fairly high correlation to stocks. Now, that kind of concludes our comparison of those 4 ETFs, as well as a little bit AQMIX as a benchmark fund. Now, if you think about the kind of core aspect in terms of one, are those products diversifying, which 4 of them have been, not the product from Wisdom Tree, and what they're offering, we do need to point out that in general, of course, we do prefer funds that are cheaper, but in some cases it is worth paying for. And if you look at the Sharpe ratio of AQMIX from AQR, we prefer to pay higher fees for a product that offers a Sharpe ratio close to 1 versus products that are much worse from a risk return perspective. And that concludes our review of those 4 ETFs, as well as that kind of benchmark fund from AQR. And overall, it's great to see that these sophisticated strategies have become available as ETFs that are easily accessible. Having said that, portfolio construction matters, and sometimes it is worth paying for. Hope that helps. Have a nice day.